Apple stock has declined by over 15% since the beginning of the month, while S&P 500 has only declined by just about 5%. And this is mostly because of the technology stock sell-off. So the big question is Apple stock overpriced or is it good buy at this time? In this video, we'll answer that by analyzing Apple stock, its fundamentals, as well as expected future revenue. We'll also unveil one of the most exciting projects that Apple has embarked on. Be sure to watch this video until the end and let me know what you think. Apple has yielded almost 60% to investors so far this year, while the stock price is showing a gap of 17% from its all-time high price of $137.98 after the stock split. Apple's trailing price-to-earnings ratio multiple has decreased more than 15% and shows a forward price-to-earnings ratio of 36, which is almost as high as Apple's stock price-to-earnings ratio back in the end of 2017, before the stock market crash. What's more, Apple's price-to-earnings ratio is about 40% above its price-to-earnings ratio of 24 at the beginning of the year. So the stock has become significantly more expensive this year. With the exception of Amazon, a peer comparison indicates that Apple may not have much more room to grow. Compared to Apple's price-to-earnings multiple of 36, the forward price-to-earnings ratio for its peers, Microsoft, Google, and Amazon, stands at 33, 35, and 102 respectively. Looking at the fundamentals of Apple suggests that Apple's recent market move is sharply at odds with its long-term stock price trend. The stock has returned nearly 180% for its investors between 2017 and year to date, with about 60% return this year alone. But fundamentals don't quite back this long-term growth of the stock price. In fact, Apple's revenue has increased by 13.5% from $229 billion in 2017 to $260 billion in 2019. For the trailing last 12 months, the revenue figure stands at just under $274 billion, implying an increase of 5% over 2019 numbers. So while the company is still growing, its rate of growth is slowing down, putting Apple's lofty stock valuation in question. There hasn't been any change in the profitability over the years. Apple's net margins have remained roughly flat between 21% to 22% for the last few years, and the last 12 months are no exception. While as an investor you can be confident about Apple's ability to be profitable, you may wonder whether the massive increase in the stock price is justified. Looking at Apple's last quarterly earnings result, we notice that in Q3 of 2020, Apple posted quarterly revenue of $59.7 billion, an increase of 11% from the year ago quarter, and quarterly earnings per diluted share of $2.58, up 18%. Apple's international sales accounted for 60% of the quarter's revenue. A breakdown of Apple's sales show that iPhone remains the biggest revenue stream for Apple. Personally, I believe that with the 5G in the immediate horizon, iPhone sales will grow drastically over the next quarter and in the year 2021. Looking at iPhone sales in quarter 3, the sales grew by 2% compared to the previous quarter. The second biggest revenue stream for Apple in its last quarter is services, which continued to boom, with Apple reporting a 15% growth. I anticipate the services revenue stream for Apple will continue to grow as they boost their offering through the iTunes Store, the App Store, the Mac App Store, the iBook Store, Apple Care, Apple Pay, and licensing and other services. Moreover, Apple reported $6.4 billion in the wearable sales compared to $5.5 billion in revenue for its wearable business in the last year's third quarter. Looking at the revenue of Apple, the company reported over $260 billion in 2019, and it is estimated to make a revenue of $273 billion in 2020, and a revenue of $307 billion in 2021. Apple's earnings per share is estimated to reach $3.25 in 2020, $3.86 in 2021, and $4.13 in 2022 fiscal year, according to analyst estimates. Apple is showing a forward price to sales value of just over 8, which is again higher than that of sector median. A forward price to sales ratio uses the stock's last close price and divides it by the next fiscal year consensus revenue per share estimate. In its last quarterly financial report, Apple indicated that it expects supply of a new iPhone to be available a few weeks later than the late September iPhone launch in the previous year. Apple rarely, if ever, discusses unrelated products, but the company made such comments in the context of providing insight into the quarter ahead since it did not provide revenue guidance. It is anticipated that Apple's long-awaited 5G iPhone will reportedly make its debut in October 2020. In fact, it is expected that the tech giant will launch 4 new iPhone models at its annual fall keynote, as well as new Apple Watch, iPad, and HomePod, according to Bloomberg. Apple has asked suppliers to build at least 75 million 5G iPhone for the later this year, roughly in line with its last year launch, and a sign that demand for the company's most important product is holding up in the midst of the global pandemic and recession. By the way, a news that does excite Apple's fans is the opening of Apple's most ambitious retail project in Singapore. Apple has unveiled its most unique Apple store, which sits directly on the water on Marina Bay in Singapore. Appearing as a sphere floating on the water, the store introduces a new and captivating retail experience at one of the most iconic locations in Singapore. This all-glass dome-shaped store is entirely surrounded by water, offering uninterrupted 360-degree panoramic views of the city and its spectacular skyline. Personally, I own shares of Apple, and while I believe that Apple's stock price might be slightly overvalued at this time, I believe in this company long term and intend to add to my position gradually. This way I can grow my holdings of Apple stock while not pulling the trigger all at once, being able to take advantage of some potential drops in the stock price. Do you own shares of Apple in your portfolio? What do you think about Apple stock and its prospect? Let me know in the comment section down below. Thank you folks for watching this video. We put a lot of effort to prepare this video, so we really appreciate it if you can give it a thumbs up if you enjoyed this video and share it with someone who might benefit from it as well. And by the way, please don't forget to subscribe to Momentum channel. Here on Momentum channel, we post weekly videos about investing, stock analysis, and finances. Hope to see you next time.